Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Monday, June 10th. Let's take off. All right, guys, first up on the docket, Bitcoin bags $2 billion in inflows. Ether sees highest institutional buying since March. And if we scroll over to this article here, it says Bitcoin ETF sucked up 2 months of Bitcoin mining supply in first week of June. So what that means essentially is that miners produce the new inflation of the currency. And in 1 week, just from ETFs alone, it sucked up more than 2 months of Bitcoin mining production of the inflation that occurs. If we really see a more bullish market cycle, if things really turn bullish, if the economy really rips, you could see theoretically these ETFs absorbing and gobbling up more Bitcoin than the production for months or even potentially a year at a time, right? Because we know that Bitcoin only has 21 million coins and it has a hard capped supply issuance, and the supply issuance schedule is algorithmically controlled, with every 4 years it being cut in half, right, with something we call the halving. So these are incredibly bullish headwinds for the underlying asset, and it shows the very real possibility of a supply squeeze here, where we simply just run out of supply production from the production side if the price really rips. What else I thought was very interesting is that the ETF store president, Nate Geraci, he says here that in an X post, he says that the Bitcoin ETF AUM is already around 60% that of the country's gold ETFs, despite gold ETFs being around for 20 years and Bitcoin ETF for only 5 months. I think this follows the narrative that Bitcoin is the digital version of the analog, right? So the analog being gold, or Bitcoin is the digital version of that, right? And I think with everything we've seen, from mail to email to all sorts of things that have been digitized, that just the value capture is so much more, it's so much faster, and it flows so much quicker. And you just see so much more value accrue to things that live on top of the internet. So back to this article, we also see that Ethereum is seeing a lot of institutional buying, and I think this is a front run of the actual ETF. The S1s haven't been finalized yet, so we haven't seen most of those Ethereum ETFs launch yet because they haven't gotten final approval on the S1 and the S1 side of things. And I expect I mentioned last week that the SEC was dragging their feet, and I expect them to continue to drag their feet. They just they don't want to see fair and efficient markets. They just want to live in their ideological cage and continue to tamp down the industry, it seems, and in any which way they can delay things and stop things. It seems like that's just what they like to do, right? So just waste our tax dollars with this nonsense. Next up, Bitcoin network transaction fees temporarily soar to nearly $52. I was sending a Bitcoin transaction this weekend, and it was like, normally I'll spend, maybe it's like $200, $500 transaction, and fee might be $2, $1.50, $3, whatever, if things are really busy. And I looked at my screen and I did a double take. It was like $56 to send like $200. I'm like, what is going on right now? Well, this is good and bad, right? Good in the sense that there's strong demand for block space on the Bitcoin network, right? So the big argument for many people has been, hey, what are you going to do when all the coins are mined? Who's going to support the network, and how is the base chain going to continue to go on if the miners aren't getting, freshly mined or freshly minted Bitcoins from the inflation? Half of the Bitcoin that usually goes to the miners will go to the miners over the next 4-year period. So historically, what's happened is the supply squeeze has resulted in a price increase and many other factors of adoption. Again, Bitcoin has been the best performing asset in all of human history, so the price has gone up, super linearly, right? It's gone up exponentially throughout time. Even if the miners get less Bitcoin, it's worth a lot more in fiat dollar terms, right? So it's very easy to continue to pay the bills and to stay profitable in that sense if you're running an efficient operation. So when the transaction fees are soaring like this, when they're going up high, it means that there's so many people trying to get transactions on chain, on the base layer of the blockchain. And that's good for miners because there's demand and the fees are going up. So what this essentially means is that it's another revenue stream for miners, right? So when all the Bitcoin is mined, if the network is heavily utilized and the evidence is suggesting that the usage on chain is going like this, it's continuing to rise, more people with wallets, more people using the network, more fees because there's more activity. That's a good fundamental driver of growth and a fundamental metric to track and look at, that the blockchain is doing very well. It's very healthy. It's living in real time. And to demonstrate this, I'm going to show you guys probably one of my favorite ways that I when I talk to people about Bitcoin, it's this tool called bitfeed.live, and we use it at our local Bitcoin meetups, and it's fantastic because what it does is it just really shows the network in real time being utilized. So you can see the latest block that was formed. It shows you the time, and in real time, you can see all of these transactions are falling in. Every single one of these little blocks is a transaction. This is the real-time usage of the blockchain. And you can look here, and I'll move it down a little bit. You can see all these blocks piling up down here. These transactions are coming in fast right now. So people all over the world that are using the blockchain, here we go. Here's a transaction for 47 Bitcoin. This is a $3.32 million dollar transaction. Whereas you can look at these little ones. This is a 0.000790886 Bitcoin transaction, right? So there's 700 and looks like 79,000 Satoshis. And that's only $54.89, right? So anything from a $3.2 million transaction to a $54 transaction. And it gives you information about the bytes, and it'll show you what the fee is looking like. This mempool is what, and I'll pull this up so you guys can see. So right now there's 109,971 unconfirmed transactions, and every second you're seeing transactions just flying in from all over the world, right? This shows you that this is a living, breathing entity, right? And you can see it in real time. And I think this for most people that I talk to about Bitcoin, it's this kind of this abstract concept and they don't really get it. But when I really show them this and I say, hey guys, this is the blockchain in real time. You're watching this thing live in real time. You're seeing the latest block that was formed. You can see all the little tiny transactions in that block that was published by the miners. And you can see in real time the transactions that are growing and waiting to be put into the next block, right? So when there's so much demand, this mempool continues to grow and gets super, super big. There's, and what they said over the weekend, there was 300,000 transactions in here. What that essentially means is that if you're in a rush and you want to get your transaction pushed through quickly, what you're going to do is you're going to pay a higher fee, right? If you're a mining exchange or you're moving, millions of dollars, you're buying a house, you're buying a car, whatever that may be, you're willing to pay a higher transaction fee on this this is a 6.76 Bitcoin block, $470,000 of value is being moved. You're okay with a $20 fee on that, right? You might not mind. This block over here is, 39 Bitcoin, $2.78 million. You're not going to mind to pay a $25 fee or a $50 fee on this. It's no big deal, right? But if you're setting a smaller value transaction, which might only be, $37 or $93 or $91, you're not going to pay a $30 fee. You might wait till the middle of the night to push your transaction through, or a $34 transaction here, right? You're not going to want to pay a higher fee. And this is another reason why things like the Lightning Network are being built, so people don't have to interact and transact on the base chain. They can use a layer on top of that chain to transact, right? And with that, you might lose the level of decentralization and security you get from using the main chain, but you might just move your grocery money every week to a Lightning wallet, kind of like a Venmo or PayPal for Bitcoin. That's kind of what the Lightning Network would be. It would be a secondary layer where you can transact, and there's no fees on that. There are no or very minimal fees on that. Whereas if you want to send a high value transaction, if you're buying a car or you're transferring your life's wealth, or you're moving, $100 million or $1 million to trade on an exchange, or you are an exchange that's transacting, or you're in the future, we're going to see governments and nation states, right? So if you're if you are the government of Ecuador and you have 101 Bitcoin and you're moving it to settle a trade balance you have with Brazil or a trade balance you have with the EU, you might see these huge blocks in these transactions, which makes sense to go onto this base layer blockchain, right? But for the average users, the people in El Salvador who are using Bitcoin right now, a lot of them are using the Lightning Network to transact. They're not paying a $3-4 fee to miners or a $2 fee every transaction. They're using they might have their savings on the Bitcoin, the main blockchain. They might have their savings here, but then if they've got $10,000 in a Bitcoin wallet, they might transfer $300 every week to a Lightning wallet that they then use to buy their groceries or buy goods or pay their bills. And to get back to our early point, this is healthy for the network. This shows that there is demand for this block space, right? And a big reason that there is a fee attached to block space is because, remember, the whole world has to store this blockchain of all these transactions that have occurred in all of history, right? If you're running a node, if you're a miner, or even if you're a merchant accepting transactions, you want to have this whole blockchain stored in your database. You want to be able to reference this blockchain to verify if a transaction is real, or if it's been put into a block, or it's sitting in this mempool and it's ready to go through. You want to be able to verify that yourself by plugging into the global network, this global consensus protocol of millions of nodes and millions of miners all over the world, keeping this network alive, right? So what does that mean? That means that this right here, when we see Bitcoin network transactions fees temporarily soar to nearly 52, this is a sign of adoption. This is a sign of use. This is a sign that there is a demand for this block space, right? And this demand and the fees that are attached to it help prevent spam. You don't want anybody and everybody to just be able to take up this whole block and waste the space associated with it, right? You want people, if it's really useful to them, to attach a fee to it because there's a value proposition there, right? That's why Satoshi designed the Bitcoin blockchain the way he did. That's why there has to be a fee, because there has to be incentive to keep this globally decentralized ledger ongoing, decentralized, and running in a trustless fashion, right? So there's so many little rabbit holes we could go down to discuss all these things, but I think it's super important and cool for you guys to actually see in real time what is happening with this blockchain and how the blockchain itself actually operates. So hopefully you guys found value in that. Let's move on to our next story. Senate bill could open crypto to U.S. sanctions, but industry trying to head it off. The industry says a surprise section in a recent spending bill could slam crypto with sanction threats, but a key Senate office is now meeting with digital assets sector insiders. A provision in the recent spending package from the Senate's Intelligence Committee targets crypto ties to terrorism and caught many in the industry off guard, criticizing it as a flawed approach to a worthy goal. The staff of the panel's chairman, Senator Mark Warner, has been meeting with people in the digital assets industry to talk about the provision. Sources say crypto insiders predict the effort isn't likely to survive the budget process. It's important that we pay attention as people in this industry to little poison pills that all these elected officials and they slip into all these bills, right? So we got to pay attention, and we got to sound the alarm if it's something that doesn't make sense or that could make the U.S. less competitive. And it seems that for the past 4 years, it's been a rough go, and there's been a lot of this nonsense that's occurring. Hopefully, they will engage in good faith, but I have my reservations on that front. And finally, for the next 4 years, we have a candidate now that is in the lead saying that Trump promises to become the crypto president, law decoded, right? So the former United States president is intensifying his cryptocurrency advocacy as part of his 2024 presidential campaign. Personally, I would be content if they just left us alone and didn't do all this BS that the SEC and the OCC and the FDIC and all these agencies, these swamp agencies are doing behind the scenes at the behest of the Biden administration. But this is a very, very welcome thing to see. Trump reportedly declared he would be the crypto president at a fundraising event in San Francisco hosted by Kraft Ventures general partner David Sachs and tech billionaire Chamath Palihapitiya. So this is fantastic. I love to see it. I love Chamath and David. They do a great job on the All In Pod. And I think the past 2 weeks, particularly their weekly episodes have been absolute bangers. And I highly recommend all you guys anybody who's listening to this podcast, go check out the All In Pod, give them a listen. They just do a fantastic job. And they've got a lot of people. They've got the 4 people on the podcast they don't share the same opinion on everything. They butt heads, they talk about things, they engage in long form dialogue. It's really what the U.S. needs at this point. Though I tend to lean more towards David Sachs's way of thinking and Chamath's way of thinking on most things. I do appreciate a lot of insight from Jason Calacanis and from David Friedberg as well. It's nice to see the conversation and the talk, and kudos to them for doing what they've been doing to shine light, to expose things, to give people voices that have been majorly suppressed by the mainstream media, which has really done a disservice to the population of the United States and really created a lot of problems, a lot of lies, and a lack of accountability. The lowest level of trust in mainstream media in all of human history, right? The media is probably at its least trusted state, and they deserve it. They constantly lie. The people that are in power at these organizations are pushing propaganda at the behest of governments instead of keeping check on the government. They are just basically a mouthpiece for the government with a lot of the bullshit. And then we're finding out that, there's been a lot of lies and a lot of problems, from wars to medical misinformation to all of the problems that they've been spewing. It's very disturbing. Qatar also launches its first phase of its CBDC project. The Qatar Central Bank has completed the infrastructure for a central bank digital currency project and launched the first phase of an experimental project. The QCB will look at settlements of large payments among large local and international banks. Few details of the project were released. Hard to see where these different things are going. It looks like there's a little sandbox here. I'm kind of torn on this issue. I think if done right, a CBDC could be a good thing if they preserve the features of cash, but I find that highly unlikely. So I think it's better that we have the anti-CBDC legislation, because the government, whenever they do something, it always seems to backfire and turn into a terrible thing for the most part. So It's good that in the US, we are not getting behind that and we're passing bills and laws to sort of prevent that. But let some of these other countries sandbox it, test it out, see how it goes. But unfortunately, I think it's going to end up to be a very Orwellian financial surveillance tool used by governments against their population in violation of human rights, which it seems to be shaping up to be in China and many of these other places. Let's move on to our X Factor takes of the day. First up, Mario Nafal. Elon, we need a cleansing function for regulations because we've not really had a major world war or something like that in a while, and obviously we would like to not have world wars. There's not been a cleansing function for rules and regulations. After World War I and II, there were huge resets on rules and regulations. Now, if the society does not have a war and there's no cleansing function or garbage collection for rules and regulations, then rules and regulations will accumulate every year because they're immortal. Actionable humans die, but the laws don't. If rules and regulations just accumulate every year and you get more and more of them, then eventually you won't be able to do anything. You're just like Gulliver, tied down by thousands of little strings. So this is a fantastic little quote here from Elon on Lex's podcast, and I could not agree with him more. I mean, I think we still, if you look at a lot of these states and places, we've got so many laws and regulations that were 50, 60, 70 years ago that don't make any sense. And many of the laws and regulations just are obsoleted very quickly by technology and just don't make sense and end up being a hindrance or just a way for authoritarians to abuse their power on the population. Chris Black. This is ETH/USD. My question is, who remembers this? Seemingly inconsequential price drop in March 2020, which actually almost wrecked all of DeFi forever, right? So when you really zoom in, I mean, people have a hard time comprehending these charts because of the way Metcalfe's law and the way these crypto asset networks work. You don't just get like this linear growth, right? You get something called superlinear growth or exponential growth, where like the price of these assets, I mean, when I first started mining Ethereum, it was like, sub $10, right? And now we're talking about, thousands. Bitcoin was hundreds of dollars. Now we're talking about tens of thousands. And there's a lot of volatility. I mean, look at this chart. This is very volatile. And you're seeing like 10, 20, $15 here, all the way up to, almost $4,500. It's just very wild, very, very crazy, very sporadic. Very volatile movements, right? I mean, it's a brand new asset, right? But if you zoom in here, I mean, we're talking $30 here. We're almost at $4,000, and I think next thing is going to go to 20,000, right? Something crazy exponential that you just wouldn't be able to comprehend. So it's important to evaluate and think about these things differently. But this is why I tell so many people that come to me constantly at meetups or whatever, or just at different events or people that I meet in public, they want to get involved. They want to do this. They want to know what's hot, what's not hot. I tell people, find value and then dollar cost average. Don't try to be a trader. You're going to get burned. You're going to get shaken out if you don't have the conviction, if you don't understand what you're investing in. Do a little bit of research. Spend the time to understand what you're doing, right? And when you find something and you understand, okay, well, here's a network that's growing. There's more users. There's more fundamental people in participating. There's more wallets being created. All of these things. There's more transaction fees, right? All of these metrics, when you're seeing fundamental bullish growth year over year and over time, the rest will fall into place, right? The fundamentals will always win in the end. Whatever that number is for you, that you just set aside that you want to allocate to your investing, just dollar cost average. It's the safest, it's the best. And then have a 5 to 10 to 20 year time horizon where you don't have to worry about it. You don't even think about it. It's like paying a bill. And then every week you're buying $10. You're buying $10 when it's $30, and you're buying $100 when it's $50, $100 when it's $20, $100 when it's $500, $100 when it's $100. And then over time, you're going to exponentially outperform almost any other thing that you could possibly do. And you don't even have to think about it. You've done the research. You've looked into these into what you believe in, whether it's a Bitcoin or Ethereum or whatever, and you're setting it and forgetting it. You're creating a budget. You're creating a plan of funds that, you have all of your bills, all the stuff you do. You set aside an amount that, doesn't affect you at all, that you're allocating towards investing. You understand the volatility of the nature. You've done your research, and then you don't have to worry about it. The price is up, the price is down. None of that matters. You are investing in the fundamentals. That is my financial advice. And that is how I invest and how I live my life. And, you do so at your own risk. Anything you do is at your own risk. You have your own personal responsibility for your actions. Here is a take that I thought was interesting. I don't think Dogecoin has been a good thing for the industry, and I'm not anti-Dogecoin, but I don't know what the use case is. At Ripple CEO Brad Garlinghouse said last week at Consensus 2024. This is an interesting one. Let's play this. Let's see if we can get
the real institutional money for some of the upside opportunity. But the biggest thing I'll highlight, and where does this go? We have to be about more than speculation. I get a ton of, when I say these things, but I'm going to say it anyway. I don't know, are there projects being built to solve real utility? And I see lots of real utility across lots of different, chains. And I think that is what is critical. And what's for me, the 10-year prediction has to be about, it's not about speculation. It's about solving real problems.
So I totally agree with the underlying sentiment of what he's saying here, where, this is not about, for many of us, this is not just about speculation. This is about designing a new, fairer, more, inclusive, and, ecosystem and financial future for everyone on the planet, right? So there's that pie in the sky goal that many of us have. Of course, price going up is fantastic. That's all great because because others are learning and seeing the value in our industry, right? So I get that completely, right? So, but I will touch on this fact that I don't know how long Brad's been around in the industry, but what I remember initially, maybe 5, 10 years ago, the value of Dogecoin was this idea that it was this coin that was created to educate people and teach people. And I remember, being around and seeing, it was like, oh, here's some Dogecoin, like, here's 100,000 or 20,000, 10,000, whatever Dogecoin. And, just keep it on an iPhone and learn about wallet, learn how to receive it, learn how to send it. And it didn't have that same level of being scared to send it as something that felt like digital gold, like Bitcoin, right? It was a fun way to use cryptocurrency. It had this ethos around it of teaching people and education. It's that level of that, it just felt pure when it first started, right? And the guy who created it was kind of created as a joke. And then, he said, guys, this is ridiculous. I made this as a joke. And then it also exemplified this idea of crypto where it wasn't like one person could control the whole project. This was like a project that was founded by somebody who's like, hey, this is a joke. I'm done with this. But there was a community that was built around it. And the community said, no, we're not done with this. We like this. This is an open source, piece of technology that we can use, that we have, that we love. So we're going to continue to use it. And I truly do believe that the ethos of that in the beginning of that, and it was not based on, hey, we're just going to get rich quick, right? It was based on this more pure expression of being able to financially transact and to do it in a way that felt fun and also felt unencumbered and felt like, hey, if I lost my Dogecoin wallet, if I left it on an old phone and forgot to back up the private key or I didn't know about it, it was like this intro to sort of learn about crypto and learn about how to transact in using public and private keys and to send cryptocurrency to others and not be scared because it was a picture of a dog and it was fun. It was inviting. And it wasn't so scary for a person who was just starting to wade in to learn this new technology. So that would be my comment on that and my thoughts to Brad. Rajat, people work 8 to 10 hours a day for 50 years. They take 2 weeks of vacation per year. They sacrifice time with family and friends. They give up on their hobbies, all in pursuit of a currency that can be printed out of thin air. And I think these are the posts and the things that really make you think about the rat race and take you down the rabbit hole of what is money, right? And when you really learn how the current system works and you think about, you work so hard every week to store your life energy in this currency that a government is constantly stealing from you by printing trillions of dollars. It really makes you angry when you really learn and you look at the effects of that, right? Printing, there's no accountability for all of the wasted COVID stimulus. If you listen to the Thomas Massey interview with Tucker Carlson recently. He was one of the few people who drove all the way to Washington, D.C. to basically fight back against all of that and say, hey, this is going to result in massive inflation, which we're seeing now. All the experts, all the mainstream media lied or they were ignorant and said, no, it's not going to cause inflation and all this stuff, but very clear, Austrian Economics 101, you can very clearly see that they were either lying or grossly incorrect, right? The Paul Krugmans of the world, all these clowns who make a living off of the exploitation of the population, really, right? This money printing really ends up hurting the poorest people, right? It exploits them because now they have a higher cost of living and their wages are really one of the last things to go up to compensate for that. One of the last ripple effects in the economy. So it really puts a tremendous pressure and struggle on them. DC Investor, yet another friendly reminder that transaction fees on Ethereum are not an extractive mechanism. Without fees, there would be no consistent way to determine which transactions get included in a block given limited block space. Burning the fees provides a largely diffuse benefit to all holders of ETH by reducing marginal ETH supply, and is actually far more equitable than the previous condition of paying them all to miners or alternatively to stakers under POS. Transaction fees are very important. If you don't have a way to filter out spam from a limited amount of block space, because remember, the blockchain is only a thing, right? It's this central ledger that is decentralized. It's this ledger that the whole world trusts at the same time. Well, in order for the whole world to trust it at the same time, they have to be able to store it and verify it in real time, constantly, 24/7 around the world. This is an incredibly costly thing to do. You wouldn't really, it wouldn't make sense unless you were trying to have a decentralized global money or similar thing where the whole world could trust in a trustless fashion, right? If that makes sense. It's this idea of unforgeable costliness and no trusted third party, because everyone is looking at it at the same time and verifying its accuracy, right? So you can't just let people post whatever, because that would put a tremendous cost. There has to be a cost associated with posting on that chain to have a piece, to own your to put your transaction on that block, or put your NFT or your smart contract or whatever it is. There has to be a cost to that. And that way it filters out spammers. And you see this with email, right? There's no cost to send an email to somebody. Hence, you get so much spam email because it doesn't cost them anything. They don't have to burn any electricity or do anything to send that, right? So the way that's handled with a blockchain is that there's a small fee, or what we call a gas fee, that's associated with those transactions, right? Now, I do disagree here that, I see that burning part of the fees, it definitely provides a largely diffuse benefit to all the holders of ETH. Can't argue with that. And it also reduces the overall supply of ETH. It's like a slow little mechanism that takes some supply out, which if an Ethereum holder, less supply could cause a price increase, right? So or at least that's the basic microeconomics logic there, supply and demand. Econ 101. But is it actually far more equitable than the previous condition of paying? I don't know about that. I don't fully agree there, because the miners and now and also the stakers now who are running nodes and doing stuff like that, they are providing a service to the network, right? So is it fair if and again, I'm biased, but I think that if you're providing a service, you should be compensated for that service. Now, imagine if you went to McDonald's and they handed you a cheeseburger, and you handed them the money, but then you ripped the bill in half, and you said, "Well, I'm going to burn this half. I'm going to give you. I know it's $20, but you're going to only have half of a 20 now. So here's the 10." That's kind of. I don't know if that's really fair and equitable, but gentlemen can disagree. And again, a lot of these are just real-time experiments in real time, right? So these different networks, and especially with stuff like Ethereum, right? This is why Ethereum is not super sound money, because they keep changing the inflation and the burn and the supply and the issuance schedule and the underlying consensus protocol that underlines the network itself, right? From proof of work to proof of stake. I mean, this is a real-time financial experiment, right? And that's why I think that Bitcoin is a better sound money for the world, where Ethereum can do other things and shows promise in other areas. But I think the hot swapping of all these features and go fast and break things, you don't want that with the money, right? Hayden.eth, the founder of Uniswap: thinking about building a DCA feature so y'all can touch grass more. Thoughts? Love this. A dollar cost average feature would be amazing, especially built into Uniswap. And I said this would be one of the best things you could deliver to the plebs. And I truly believe that most people should not be actively trading. They should be, if they want to invest in something, find the value and allocate capital over time. If you want to put in a lump sum at one point and then continue to allocate, that's perfectly fine. But don't try to time the market in and out constantly. You're going to end up getting burned, unless you have the experience to do so, right? So dollar cost average, that is my financial advice to the world. Anyone who has taken that financial advice from my meetups, for wherever I've met, and has listened and had a time horizon of 5 to 10 plus years, and had multi-year, not month to month time horizon, is up exponentially in their returns, right? They've seen massive returns on their portfolios, right? Things you'd have to stay in the stock market and just buy the NASDAQ for 50 years to see the kind of returns that I've given them in a couple, just from very basic dollar cost averaging, right? Bitcoin, Ethereum, a couple other small projects, right? Once you do your research on them, dollar cost average, allocate, don't think about it, don't be emotional, and buy the value, right? Own a piece of that protocol, own a piece of that network that fundamentally is growing in value. It's fundamentally increasing in users and transaction volume and transaction fees and wallets created and adoption. I mean, these are all just, very apparent to see if you look at the charts. So the fundamentals, right? Next up, Jameson Lopp. Astounding report on how the Ugandan government is leveraging national ID plus biometrics plus AI to support totalitarianism and commit human rights violations. Registering a population can take many forms, including drafting paperwork for every birth and death. But when there is no system to do this, either because of a lack of infrastructure, mass illiteracy, or simply because of the challenges associated with reaching rural populations, biometric technology can provide a neat proxy. Since Uganda established its National Identification and Registration Authority, or NIRA, nearly a decade ago, an estimated 60% of citizens have enrolled. A NIRA-issued ID card is now required to get a mobile SIM, transact in a bank, register to vote, and get medical treatment. There are enormous advantages to having an ID system, including financial inclusion, said Opio, who speaks quietly, occasionally nudging his frameless glasses up the bridge of his nose. The only problem is it's a perfect system in the hands of an imperfect and brutal regime that applies the system to suppress opponents, target critics, and settle personal scores. And this is why we cannot have all this power in the hands of the government or in hands of authoritarians, right? We need the opposite, which is things like Bitcoin, which are permissionless ways to store value and transact and to do business and operate. The way things are going over the next 2 decades, at least, a lot of these authoritarian nations, will have the power to totally and utterly suppress their populations if they so choose, or to retaliate or to silence people. It goes against the liberties and the freedoms that the Constitution of the United States gave its citizens, right? So many of these places on earth do not have those guarantees. They don't have those assurances. They don't have that Constitution. And we are in danger of losing those freedoms and those privileges here in the United States, the things that our founding fathers created when they created this nation, right? There was a revolt, a revolution to leave. They were all outcasts and criminals. They were declared, dissidents of Great Britain to form the United States, right? And they came here and they formed a document that gave you these inalienable rights and gave you these constitutional rights, right? So our Constitution does not allow this type of surveillance. It does not allow even the things that the government and these banking institutions are doing to us now. The Constitution explicitly forbids this. So I'm very confused how many of these laws still exist when the Constitution explicitly says that people should not be subject to unreasonable searches and seizures, and we have a Fourth Amendment right. And all of these other rights, our Second Amendment right and our First Amendment right. These are non-negotiable things, right? So this is the very core of our constitutional republic, right? A lot of people say democracy this, democracy that. We are a constitutional republic, and the Constitution was designed to protect the minority from the tyranny of the majority on many things, right? So these constitutional and are inalienable rights that we have as humans and as citizens of the United States. Alex Gladstein, completely blown away by the potential of the Bitcoin, Lightning, Nostr, eCash stack. These open source protocols blend and support and enhance each other so beautifully. Can't wait to see how this evolves over the coming 12 to 18 months. All right, so you've got Bitcoin, and then you've got all these other things that are being built, like the Lightning Network, like Nostr for social media, like the eCash stack. All these things are being built on top of Bitcoin, right? And Bitcoin, the base layer, is that base blockchain that I showed you guys that people are using, but you can also use things on top. And the reason you do that is, especially something like Lightning, is because the main Bitcoin blockchain is expensive to use. If you're sending a high value transaction, no problem, right? But if you're setting a small transaction, the fees can get very high, right? And that's because there's a demand for that blockchain. There's a demand for that decentralization and that global consensus protocol, right? There's a demand to use that. So that's why we've got all these other things being innovated and built on top of the network. So when people interact with Bitcoin 10 years from now, 20 years from now, a lot of the things, they're not going to interact mostly with the Bitcoin base layer. Most will be interacting on things like Lightning, right? The same way you don't have an account at the Federal Reserve, and even some banks don't have accounts at the Federal Reserve. You might be using PayPal, which is using a debit card, which is using a bank, which is using the Treasury Reserve assets, which, you might be 7 layers up the stack. You're not interacting with the Federal Reserve who's issuing. Do you see what I'm saying here? So in the same way you might not be interacting with Bitcoin's base layer in the future, you might be using the Venmo of Bitcoin, which is like the Lightning Network, or you might be using the Nostr of Bitcoin. So interesting to see and nice to see the continued development of those tools for people. Daniel Batten, we've arguably never had a chart that tells such an important story about Bitcoin mining and ESG. This new chart, the result of 12 months research from the Digital Assets Research Institute, says over 4 years, Bitcoin price and hash rate quadrupled, but emissions didn't grow, effectively ending the speculation that Bitcoin emissions will rise unsustainably in the future as the network expands. So I don't think Elizabeth Warren's going to like to see this, or the Biden administration with their emergency little thing they tried to push through. to force miners to give us all this data about their operations. Here's the thing: static emissions have essentially been flat or have gone down over the past 4 years. And the growing hash rate means more Bitcoin mining machines have gone online, more data centers are being built, more machines are coming up, and the growing price of the price of Bitcoin has gone up too over the past 4 years. So you see that has not affected the emissions at all. And Bitcoin is the cleanest and the greenest type of energy usage in any industry, right? And this because there's a financial incentive for Bitcoin miners to seek out the cheapest, lowest cost energy because they use it 24/7. More green energy builds. The wind farm in the middle of nowhere, the solar panels in the middle of the desert. Who's going to use that energy 24/7? And that allows them to turn around and buy more panels, build more wind farms. Do you see where this is going? It's a viral loop. Self-fulfilling prophecy. Match made in heaven. Ryan Sean Adams from Bankless. AI tells us what's possible. Crypto tells us what's true. ZK proving and verifying costs will drop towards zero so we can verify AI content and defeat deepfakes. Bullish ZK. Bullish aligned layer making ZK cheap. We live in an era where we can no longer trust what we read, see, or even hear. Verification is both more difficult and more important than ever before. We need tools to define the truth, right? So what does this mean is that anybody can generate anything with AI. You can generate a deep fake, a video of somebody. You can generate a fake news story, all these different things, right? So how will we know if that story or that thing is real? Well, crypto and blockchain itself use this technology called public-private key. And all that means is that username is essentially a username and a password, right? If somebody signs a public key to send a transaction or to verify something, it's really them because they verified it with only the password, the private key that they only have, right? So whether this is you see a breaking news story from CNN, and guess what? It's a fake news, right? How can we prevent that? Well, CNN could have a public-private key pair where they sign all of their stories with that they release, right? And it shows you on the blockchain, hey, this has been verified it's been signed by the private key that belongs to CNN. So when you see a story, if you don't have verifiable proof that they signed that key to publish that story, then you know you can't trust it that they put out. Then you'll know, okay, this story really came from CNN, right? So that's kind of what he's explaining here, and kind of how these tools can go hand in hand. Daniel Batten, I'm going to give this a quick read through. It's a nice little link. I'll have my media team attach it to it, but it's just, anytime you hear anything from people saying, oh, Bitcoin's bad, this, that, and the other, Daniel Batten has a great post here that says, that describes, how Bitcoin is a tool for financial, social, and environmental justice. While I was wrong to judge Bitcoin a speculative asset that used a lot of energy. Evaluation without research is unscientific. It's also arrogant. I was guilty of both when I first came across Bitcoin. Since then, I found 18 significant benefits, none of which are obvious at first glance. Having an international borderless currency that governments cannot surveil or freeze, with fixed monetary supply that prevents irresponsible government funding of forever wars, passing debt burdens to future generations, and inflationary money printing that widens wealth gaps. Number one, probably my favorite of this is this idea that it stops funding for irresponsible government funding of forever wars, which if you look at the past 100 years, the past 110 years, we've seen nothing but these huge, massive wars that were all funded by the detachment of the gold standard, of the funds being available to fund these wars because governments in 1913 first detached from the gold standard. They reduced the amount of gold in a dollar, and what that allowed was them to essentially print money. Now they could print twice as much money, and they could fund this war, the entrance of the U.S. into World War I, right? So all of the wars we see now, the Iraq War is another great example of this. Trillions and trillions have been squandered in Afghanistan and in Iraq, and it's been nothing short of a disaster. And we really have nothing to show for it, right? $5 trillion later, the Taliban now continue to rule Afghanistan. And all we did was pay for it out of through inflation, money printing, could have been used to contribute to the United States and to help the citizens here. Instead, they were squandered to kill millions of people and have deaths and destruction all over the world. Number two, having a secure, portable, decentralized 24/7 store of value. Number three, getting aid to war refugees in Ukraine. Number four, rescuing a national park in Africa. And again, these are all these stories are linked with sources are all available here. Enabling Afghanistani women to avoid state-level financial discrimination. Remember, anybody can use Bitcoin. It's the same way you can set up an email address with a smartphone. Number six, establishing the economic sovereignty of 14 African nations still experiencing French financial colonization. Number seven, verifying the integrity of Guatemala's electoral process. Number 8, providing banking to the unbanked. There are approximately 2 million unbanked in the world. It's actually closer to 2 billion, not 2 million. So it's actually almost 30%, 30 to 40% of the population on the planet. Number 9, providing a financial system that is harder to use for money laundering than fiat currency. Number 10, removing the risk of financial reprisal. If you're doing something illegal, your record of that is always going to exist on everyone's computer forever. The data, the information is always going to be there, right? It's never going to go away. If you're a terrorist or whatever, the proof is right on that blockchain. So it's much better for them to use US dollars and Swiss bank accounts or cash or whatever, right? So the blockchain is this public ledger. Number 10, removing the risk of financial reprisal for running humanitarian campaigns in autocratic nations where 5.7 billion people live. Developing a monetary financial system with significantly lower emissions and emissions intensity than the banking system, right? So even with all the Bitcoin mining that's occurring in the world, it still uses much less energy than the traditional banking system. Number 12, allowing people in developing nations to receive remittance payments from family without delays and without heavy fees, right? So you don't have to hop through 7 different banks or through a money transmitter charges 20% or 15% or 13% or whatever it is and wait 3 days for the money to get there. Now I can open up my phone, I can press a couple buttons, and somebody anywhere in the world can receive those funds almost instantaneously. No permission, no middlemen. That is a powerful thing. The same way we can send information around the world at the speed of light, now we can send financial value around the world at the speed of light with nobody's permission. Number 13, providing energy abundance to multiple villages in Africa who were previously without power, right? So this is fantastic. And this is probably one of my favorite Bitcoin mining stories. A small village might need energy to make water clean, to clean water, to do groceries, to have a pump for a well, to have lights at night, or to charge their smart devices, right? And normally, there's no incentive for a energy company to come out and to install a giant megawatt kilostation, on a river. Why would they do that for a small community that's never going to pay them enough for it to be worth it, right? Well, now with Bitcoin mining, there's a financial incentive for them to do that, right? They can say, hey, we're going to come build this hydroelectric facility for these people. Who's going to use the other 95% of that energy? Who's going to use it? Well, historically, it's been nobody, but now it can be mining. And this is all green energy, right? So a hydro facility on a river, when the people of the village need to use it, they can use that small amount of the energy, and the rest of it can be sold to Bitcoin miners who are getting a good power rate and who are also now financially incentivizing the development of green infrastructure, right? That's my fantastic story. Highly recommend reading it. Number 14, becoming the world's most sustainably powered major industry. Number 15, accelerating the renewable transition by making renewable generation more profitable. This is a 24/7 consumer of green energy. That's what Bitcoin mining is. And what does that mean? They can say, hey, we're going to build more solar panels. We're going to build more wind farms, right? We now have a 24/7 buyer of this energy that's being produced. Number 16, developing energy independence for Bhutan. Fantastic. 17, reducing more emissions from landfills than the largest DAC project in the world ever achieved. This is awesome. Landfills leach methane. Who is going to consume that? What industry in the world is ever going to come and say, hey, we want to get this methane from these dumps? Guess what? Bitcoin mining is that industry that will come to a clean burn, and not just here in landfills, but also in natural flare pipeline leaks, right? Who's going to go in the middle of nowhere, locate and consume that energy, right? Nobody, except for Bitcoin miners. Now we can bring a container, drop it off, and then we can take that leak, that flare leak, and instead of releasing that unfiltered, terrible for the atmosphere methane and other parts of the flare gas, now we can run it through a generator, burn it off, take out all of the worst parts of the burn, and then have a clean burn where you don't have all the methane and all the crap and all the bad parts of the burn that are terrible for the atmosphere. Number 18, providing up to 250 million people in countries experiencing hyperinflation a means to stop 50% plus erosion of their family savings per year. In a lot of places, it's even faster than that. You might lose 70% in a week, right? In places like Venezuela or Zimbabwe, people were losing 90% of their purchasing power on a weekly to bi-weekly basis. So now, even though Bitcoin is volatile, people now have an option to save in a currency that has a hard cap supply that the government can't control or print out of thin air, and that's globally decentralized. And I promise you, anybody who's done this for more than a year or 2 years or 3 years has vastly outperformed every other asset and every other currency in the world, right? Including the US dollar, right? If you look at the US dollar and you put it up in a chart next to Bitcoin, since inception in 2009, the US dollar has lost 99.9% of its value relative to Bitcoin. Bet you didn't know that one. That's a crazy one, but it's true. Misha, Da Vinci. Since 2008, a small group of brilliant people have been re-engineering the internet and world. They are designing open and democratizing technologies, blockchain networks, cryptocurrencies, DeFi, Web3, ZK proofs, and more. Bitcoin was built on the backs of all these other cryptographic ideas and all these cypherpunk ideals going all the way back to like the 50s, 60s, 70s, 80s, 90s. This is not just magic money that was created out of nowhere. This was something that was thought about, and these cryptographic principles and ideas were combined from proof of work to this idea of a digital gold, the history of money, to hash signatures, to this concept of hashing, to Merkle trees, to all these different areas of cryptography, to public and private key pairs, all these different things, right? SHA-256, all these different ideas came together in 2008 to create Bitcoin. And from there, here's a history of all the things that have been developed and the things that are coming, the highs and the lows. And if you guys have more time, there's, you can just go down the rabbit hole and read about each individual one. So a lot of cool stuff here. Highly recommend. Misha has put out a lot of great content. Check out her Substack. She has a nice little YouTube channel as well. Very cool. Breedlove, and I'll let you guys go with this one. In 1913, the death sentence for the U.S. Constitutional Republic was written. Both the income tax and the Fed were created that year. The income tax made everyone's earnings the property of the government first. What the government allows people to keep is then relentlessly stolen by the Fed's inflation, right? And again, if you go back to the founding of the USA, counterfeiting of the currency, all the stuff that happens now was punishable by death. I mean, the founding fathers did not want all of the things that are happening. This was never intended. People revolted over a 2% T-tax, right? That's where we almost had we literally started a revolutionary war over like small taxes. And now today, the founding fathers would all be rolling over in their graves. And this is how great nations fall, right? They recklessly spend, they steal from the population by printing money. It's all a repeated pattern that's occurred throughout human history, right? So the founding fathers took great care to prevent many of these things from happening. Slowly, the foundation of America has been eroded away into a place today where it's not even recognizable anymore. And we actively have judges who swear an oath to the Constitution saying that these amendments don't exist in my courtroom. I mean, that to me is just unfathomable, right? And I know I've talked about that 3 times now, but these are just the things that grind my gears and blow my mind. And sadly, most people in the U.S. today are they need to go back to our roots and understand and educate themselves on the U.S.'s founding and what our constitutional republic stands for, and why these liberties and these freedoms have made us probably the greatest nation in all of human history. And if we don't want to lose that, it's time to get back to that. Stay safe, stay blessed, never stop learning, keep an open mind. Thanks for listening.